What's up, everybody? Let's see, let me send out the tweet just to let people know we're live. All right, so the tweet's out. See, one thing I want to do is pop the chat out so I can. What's up, Glade? There we go. Pop the chat out. Put it over here where I can see the chat comments. You guys hear me okay? Let me know the volume is turned up right. I don't think I changed anything since last week, so it should be good to go. And we'll give it a few minutes as always. Start right at 5 p.m. market time. Thanks, guys. Anybody watch that Chiefs game? Good old Raiders. Has everybody been checking out some charts and getting ready for the week ahead? There is a lot of stuff. You know, I have quite a bit on the list this week, and it's I felt like I was actually cutting some charts out that are nice charts, but I just didn't want to have overload, right? Too many. Guys, if you are on Twitter or have other social media places where you can share the link to this live stream, go ahead and do that for me just so we can have as many people interacting as possible. It's a lot better to have more people when it's live than it is if they're asking questions after the fact and we're not live. Yeah, the FinViz was funny. I actually just ended up using it with on Vivaldi. I've been using Vivaldi for my browser as far as the chat room, and so it was working fine with FinViz, but Chrome was sucking a fat one. Got about another minute we're gonna give it, and then we'll start this week's prep. Man, Christmas is almost here. This is nuts. Can't believe it is December 12th. Get a drink of water and we'll get kicking. What's up, Dino? All right, guys. Well, it is December 12th, Sunday. This is your Sunday prep. It's me, Ricky. Hope everybody has enjoyed their weekend. We are getting closer and closer to the festive holidays. Make sure everybody stays focused on what is truly important in your life. And trust me, it is not charts. But because we have to make money, because this is a means to an end, that's hopefully why you guys are joining me, so that we can have some good discussion about some possible ideas on trades this coming week. Real quickly, hopefully you guys saw Goose's midweek watch on Thursday morning. he made it extremely interactive, was having people in the chat throw in levels that they thought he was watching, you know, and it was amazing. And I highly implore all you guys to make sure you are watching those, because his ideas usually pan out pretty damn well. Like, he's been spot on. That is Thursday mornings at 8 a.m. I believe, my time. What is that? Or no, not my time. What time does he go live? 6 a.m. I believe, my time. Anyway, that is, make sure you guys are subscribed and turn on notifications so you guys get alerted when we do those. Also, we just did our eighth episode of the Method and Mindset with me and Kim and Kurt, and our guest Eric was just venturing into going full time after, you know, having a track record that made him think, you know, I'm ready for this and this could be my sole source of income. And so I thought it was a very, very good episode. And in fact, some of the things we talked about in that, I will kind of touch on a bit in the intro today. If you guys missed it, those are on TrueTrader.net's YouTube channel. You can go watch all the Method and Mindset episodes at your leisure. As always, remember, we also have methodandmindset.com, which you can go and watch hours of webinars that we've put up there for free at any time you want. So those are really good resources. Make sure you guys use them. So I did want to touch briefly on a few things, and that is, you know, during that Method and Mindset episode, we were talking about the opportunity cost of trading the whole day, or at least sitting at your desk and watching stocks all day long. Now, I understand that a lot of people trade trends, right? And they want to get paid for sitting in a trend as long as that trend holds. And I completely understand, and that's fine. But there are times, right, when we put trades on in the first 30 minutes of the morning and the trade pans out pretty close to your full profit targets anyway within that first half hour. And, you know, maybe, just maybe, it doesn't quite get to where you think your final target should be. But what happens is, instead of taking your profits there, it bounces in front of you and you end up sitting in front of your computer for another 4 hours so that it can finally come back to the lows and maybe make new lows, and maybe you get your final profit target. And in the end, oftentimes we end up making a very inconsequential amount more. But we had to give up so much more in order to make that money, right? The opportunity cost was whatever you could have done during those 4 extra hours you had to sit in front of the screens. So I really want you guys to think about what is it costing you to sit in front of the computer all day? We trade as a means to an end. You hear me say that all the time. And it's super important to keep that in mind, because most people, if you ask them why they started trading, it was because they wanted the freedom that they thought trading could give them. And it can give it to you. But what most people end up doing is becoming a slave to their screens. And, you know, some people don't even really notice it happening. They're just, you know, infatuated with price action and watching every last tick. But you're really missing the bigger picture here, and that is the freedom that trading could give you if you could find a way to pull away from those screens. And for anybody that's in TrueTrader, you guys already know. And for those outside looking in, you may not know this yet, but like TrueTrader focuses on setups that come within the first half hour of the day. We do a live stream every morning for the opening hour, but the majority of the A+ setups are within the first half hour, and I would even really say that they happen in the first 15 minutes. And that's because we're taking advantage of price imbalances that usually occur right off the open. And you get a major spike into a level or a major flush into a level that gives you an edge. And, you know, you can take the quick and easy money and have a life outside of trading. Or you can sit around and, you know, oftentimes maybe you get that final profit target. But what if you're sitting there all day long, and while you're sitting there staring at screens, you see 3 or 4 other trades that, you know, you're bored, you're waiting for your final target on something, and why not take these trades? But they're not A+ setups. And then before you know it, you got yourself in another trade or two that aren't necessarily working as great as you wanted them to, and you're actually losing money by staying there more. So think in terms of, you know, how much you're making for the amount of time you're spending, right? So Benito reminded me of this Tim Ferriss concept, right? Where he was like, the guy that makes $300,000 a year but works 90 hours a week is probably less wealthy than the person who works makes $30,000 a year and works 15 minutes a week, right? So make sure you're getting value from the hours you're putting in. And just because you're not trading doesn't mean there's not stuff for you to be doing, right? You'll hear me say this a lot too, which is the majority of your work should happen when the markets aren't moving, right? You have a lot of stuff that needs to be done in preparation for those trades when they set up. So tracking setups, tracking data, refining your strategy, finding holes in your strategy, learning how to possibly manage your risk better. Those kinds of things, you know, can happen in your spreadsheets when the market's closed. But if you spend 8 hours a day staring at charts as they're moving, then your brain's fried by the time the market closes, and you don't even have the energy in you to do the data tracking either. So make sure you guys are, and here's the other thing, if you're trading the trend, right, and you want to get paid for it, how often does staring at the chart actually result in the chart doing what you want it to do? You staring at it while it's working doesn't make the trade work. There is the ability to put profit-taking orders out there with, you know, they're called OCO orders. One order cancels the other, right? So you could have a stop and a profit target, and you can go live your life, and you don't have to stare at the screen, and you're going to either get your final profit target or you're going to get stopped out. And you could use a trailing stop. You can do it a whole bunch of different ways, but you don't have to be sitting in front of the screen. And, you know, if all the money, look at your statistics, right? Everybody should be journaling. Everybody should track all your trades and your results. And, you know, my results tell me not to trade after that opening hour. My results tell me that I should remove my butt from my chair and go hit golf balls, because it's actually saves me money to go spend money. So your results should be indicating one way or another when the best time of day for you to trade is. For me personally, and for a lot of the members over at True Trader, it's that opening half hour. And the other thing to think about is, why not, if you can make a good living trading that opening hour and then removing yourself from the chair, why not? Doesn't that sound amazing? Why would you not want to just focus in when that edge is there and the price action has that volatility? Because, you know, as traders, that's what we need. We need volatility, and we need that volume, and that's in that opening hour, price discovery. So think long and hard about what your priorities are, and make sure that they align with the way you're actually trading. So that's really all I wanted to touch on as far as the intro. So we're just going to head right into the disclaimer. Guys, as always, True Trader, me, or any of its representatives, none of us are registered as security broker dealers. Not a licensed financial advisor. This is not a solicitation to buy or sell any stocks. It's just for entertainment purposes only. So let's get into the actual prep. You guys know I always like to do the broader market first. So here is your ES chart. And let's start with the higher time frames and work our way down. Now, what I want to point out is, yeah, December broke November's lows. And I believe, what was this, October? Yeah. Or actually, September broke August's lows. And, you know, obviously October came in just a little bit further. But what happened was, after we broke those lows, then we made new highs. And we're doing it again. These are just pullbacks to the weekly 20. You're going to see a lot of bearishness out there on social media. Again, just like last week, guys, I really think you should stay off social media as far as searching for opinions, because one, you're most likely going to search for ones that align with what your bias is, which isn't necessarily healthy. I think if you are looking for opinions, they probably should go against what you possibly already think. Therefore, you can get out of the echo chamber and see what other thoughts are out there. Real quick, that just reminded me of something. I want to put this out there before we go any further. I want questions in the chat, and I know a lot of people that ask their questions are asking me about stocks they're already in. And like I just said, don't be searching for confirmation bias. So if you guys want to ask questions about stocks, I'm fine with that, but make sure that you're not just looking for confirmation bias. Ask questions that can open up a dialogue, and I'm happy to help and happy to answer those when we get to the end of the prep. All right, so back to what I was saying, is that we're just trending on the weekly 20. And yes, we lost this trend line, but that pullback, like we said, I don't care about pullbacks. I care about what happens after them. So we pulled back and we're testing those highs again. And if that doesn't look like a bullish weekly candle to you, that's the definition of a bullish engulfing candle. And that's on a weekly chart. It's beautiful. When we get in a little closer, you can see, what was this? This was December 3rd. Was that last week or the week before? I think it was the week before. But that, that break of these lows here was just barely. It was just barely broke those lows and then snapped back up. And then we've been up and away. So things look very good up here. I know the argument that most people out there are perpetuating is the broader market looks healthy, but if you look under the hood, there's only a few stocks that matter that are holding everything up. And then there's a crap ton of stocks that are below their 200-day. I understand that, but those things can change. And remember last week we talked about when we did the sector analysis, how quickly those things can change. You're going to see when we get into that part today. But keep that in mind. Just because I think the statistic right now is that 65% of all the S&P, I think it was the S&P stocks, are below their 200-day. But what I'm saying is that can change quickly. Things can start getting some momentum, reclaiming those levels, and start making pushes, right? The market, I just got to play the price action I see, guys, and right now it looks good. And when I was going over charts this week, there is a ton of setups out there. I mean, there's, I put 14 ideas in this prep and I could have had 40, but I'm trying to keep it to the best. But that's just the kind of market we're in. Charts are setting up out there. So as far as support, this 4650 area, which is going to be your 20-day that we reclaimed last week, right? So we reclaimed the 20-day, we pulled back and held, and we're pushing again. So pullbacks back to the 20-day I'm looking to hold. Again, there's the monthly pivot below that as the next level of support for me, and then the 50-day. As far as resistance, I'm looking at all-time highs as the first level, and then past that we have the annual pivot with the quarterly pivot up there right at the 4,800 level. So those are the levels of resistance I am looking at on the ES. Let's look at NASDAQ real quick, the NQ. And again, you're going to see a lot of the same things. These pullbacks are basically on the monthly chart. So far, every one of these pullbacks is just a higher low. So everybody panics and, the sky is falling, higher low, and then we go back to all-time highs and the trend continues. Remember, guys, when you zoom out and you look at something like this is a monthly chart, right? These are how trends form. You have to have pullbacks that make those higher lows in order to go higher. So always keep in mind, in order to go higher, sometimes we got to go lower first. Okay? And if you think about the psychology of that, what's happening when we try to go lower? Well, shorts are piling in, longs are bailing, and when there's less longs involved and everyone's short, when we push up higher, you don't have a bunch of longs that are trying to sell and take profits, and you have a bunch of shorts that are covering. So the psychology behind why we get these higher lows and higher highs, you have to understand that, because those are the mechanics that move markets, okay? And that what I just described happens on every single time frame. So make sure that you understand that concept, because if you start learning how that applies to every time frame, you can start seeing how what may look like something very bearish on one time frame is actually creating that higher low on the higher time frame. Okay, and that's a very important concept you guys should use in your trading. Again, holding that weekly 20 very well, literally kissed off this level 2 weeks in a row. So that would be the first level of support for me, guys, is exactly where we've bounced twice now, the weekly 20. there may be some level. Actually, let's go into the daily and we'll get some more granular, right? So there's actually these lows here, which we held, we'll call it 16.2. That would probably actually be the first level I look to hold. But what I would do is, and I'm going to do it right now, is I'm just going to set an alert right there in case that level's breached. Because if that's breached, then I wouldn't be really looking for support on this name, on this index, until we got back down to the 50-day, which is currently at 15,745, and the monthly pivot's right below it. So that's the next level. So if we lose these lows, and this alert goes off on Monday, Tuesday, Wednesday, whenever it happens, or if it happens, then I know, as far as long ideas, I should probably wait until we get into the next area of support. And that's also another key concept you guys should pay attention to as far as the way I trade, is I'm using these broader markets to let me know, are we at support? Is this an area where I can legitimately think buyers are going to show up? Or am I kind of in no man's land? We might be heading lower, because if we are, I might be hands off on the long ideas until we get to those levels. And that you can flip that for the short side, right? Like, are we running into resistance, or are we just triggering along? And the market could really get ripping, because if it is, I don't want to be shorting stocks until we get to those levels of resistance, especially in these names that you'll see in my Sunday preps. A lot of these are very highly market correlated, meaning, these are higher beta names. And when the market moves, you're going to see exaggerated moves in a lot of these names. So I hope you guys understand that concept. So that, and as far as support, those are the support levels that I just named. Obviously below it, there's the 15,550, which is this pink line from the lows on December 3rd. That's kind of the next area. Resistance. Last week's highs, the 16,440 is a level I'm kind of watching, because you'll see it's just, even as far back as early November, right? We'll just draw a line here. You can see that's been a level. Yeah, we got through it, but even when it pulled back to test that level on this first try, we came right back under, right? Then we ran into it and rolled over. Now we pushed into it again and we rolled over again. So if we push up this coming week and this starts stuffing again, then I really do think we end up coming lower and testing this level, and then possibly coming lower again. Remember, going lower isn't bearish per se. It may just be that pullback we need, or that attempt to go lower before we can go higher. Now, you could say that that's what happened here. Maybe that was the pullback, and now we're going to bust through these levels. That's to be determined, right? Now, if we get through these levels, then I don't see resistance until all-time highs. Obviously, we have the monthly and the quarterly, and that puts us right up in that level. So this 16.7 area, we'll just call it 16.7 to 16.8. That's the resistance area. So we get through those. There's levels up here. 17,000 is obviously that round psychological level, and 17.1 is your annual pivot up there. So those are the resistance levels I'm seeing on the NQ. Bitcoin. Now, here's one thing I will point out about Bitcoin. I don't think it's bearish yet, but we broke this trend line, as we talked about last week, right, in the Sunday prep. A lot of times when you see these trend lines break, what happens is we bounce up and retest them. And it's, in my opinion, it's important what happens once we retest, because they need to kind of reclaim these areas and then start pushing higher if this is going to get moving. Because if it doesn't, what can happen is you can start getting these lower highs here, and then we can roll over. So what I would do is I'm going to set an alert basically for the 200-day to see if we lose it, because if this is not able to reclaim up here and then we come back under that 200-day, most likely I think we come and retest the lows from that big flush out. And if that doesn't hold, we could go lower, right? You have the 40,000 level, which is the round psychological number, and then below that, the annual pivot is right at this, what was a key level of support back in August, right? So I see no reason why, if we lose the 200-day, this doesn't have the possibility of testing 37 to 38K. If it reclaims, then we can start talking about some levels to the upside, but you can see there is a lot of resistance right in front of us. You got the 20-day, and that puts us right into these levels as well. Hopefully you guys see these. Notice these levels were important, held, rolled over, broke. Now when we retested, I would be very, very interested to see, do we stuff there? if the bulls really have some strength, I would like to see them reclaim that and then pull back, start holding that level. That would be when I'd start thinking that the bulls are getting ready to make another push, if they can do that. Until they do that, we're kind of in no man's land right here. So remember, like there's always, you could see a bear thesis, a bull thesis, or a there's just nothing here thesis. And like right now, we're kind of in that nothingness zone, which is why like the Maras and the Riots and the coins and all the names that are the Bitcoin names, yes, they have range and stuff, but they're also going to be kind of like in no man's land until Bitcoin makes a decision here. So those names aren't really my focus names moving into this week. And again, I'll just touch on Russell real quick. It held those levels we talked about last week. You can just, let's just draw a box real quick. I mean, this should be the most obvious little box ever. You can see this, right? Every time we come down here, it bounces. So we're down there, it bounced. That's kind of just what we're watching. If this were to lose this box area and then pops start fading, yeah, maybe these smaller caps are in for a bit of trouble. If we get back above these levels and start pushing, then maybe they get some momentum to the upside. That's kind of how I see those things. So that's the broader market. Let's get into the sector analysis. Like I said, guys, you're going to see it when I go to this chart. Remember what this looked like last week. It was red, red, red. Everything was red, right? Well, what did I say last week? I said, oh, don't be surprised. This can change in the blink of an eye. And look, this is 1 week of difference and everything's green, everything's strong. Now, remember, just because it's green and had a big week or has had a big month or had a big 3 months, that doesn't mean it's a long or that sector is a long, right? It just means that, okay, they finally have found their footing, they're pushing, but we still need to go and look at some of the ETF charts and see where things are at. And I've made some notes real quick. First one I had was consumer staples has had quite a push, right? We came in and it did a little stutter step when it ran into this resistance up here, little pullback to the 20 and then straight back up. So I feel like maybe we get another leg higher. We may start running into some resistance in this sector as far as like the 75 area. But you know, that's pretty bullish. And if we look at like higher time frame charts, you can see how beautiful this has been. This is a beautiful trend. And one of the things I always look for is this. Let's see if I can get these to. If you guys are in True Trader, you probably have seen this 100,000 times, and that is just how I see these pullbacks, push up, higher low, and then the break of the level, right? So this is a nice long trigger on higher time frame, even though it's not the typical setup that I like to take because there's no target. We're breaking out to all-time highs. But what I do like is when we see these to understand that, yes, even if we push higher, we may get extended and find some short-term resistance that gives the pullback, but this is bullish. I want to be buying flushes on this sector when we pull back and retest this 73 level. So keep in mind, just because I feel like we could get extended to the upside, if we pull back and buyers show up, there's names in this sector that you may want to have long ideas on. The next one I wanted to point out was XLF, the financial sector. And I feel like the pullback was deeper. You know, I think it was this pullback here. We talked about it and it bounced like we thought it should, but it just couldn't break the resistance up here, right? And then when it rolled over, it lost those lows and it just came all the way back down to the bottom side of this trend line here. But it held again, and you can see we've pushed back up and the pullback has made a higher low here. So I have an alert set for over, what is this? 3950, call it. So over 3950, and I feel like the financial sector is starting to get its legs here and we might make another push. There's a lot of charts in that sector that I went through, and one of them will be on the list today, so we'll get into that too. But a lot of the charts look like they may be ready for a push as well, so we'll talk about those. And the last one I wanted to point, well, not the last one, but the next one was the healthcare sector actually, and that's XLV. And I really feel like on a higher time frame, this thing is setting up. Now this is the setup you guys are probably familiar with seeing, where if we break back over this 135 level, the next logical stop is all-time highs, and this could get moving. I really like the look of this chart. And if you guys remember, CVS was one of the names that I've been stalking for a swing long, and it's part of this sector, and that thing is just getting extended. So this sector, some of the names in it are really getting going. I would be looking for some of the names. I'm still stalking CVS. There are day trades possible with that name. It's liquid enough and it has range. But I really, really want the swing on it. And the last but not least is energy and oil. I just really, really feel like these are still very bullish. All the pullbacks are putting in higher lows. And you'll remember, like, when we start looking at this as the higher time frames, this is a monthly chart, right? It's holding everywhere it should be. The weekly 20, we're making higher lows, back over 113.50-ish, and I think this could really get moving. And a lot of the energy and oil names also have some pretty good looking charts, so we'll get into those as well. So that's the sector analysis. Let's get into the actual ideas for the day, or for the week. We always start with our longs and the strong stocks looking for continuation. So first name on the list is from last week, guys. It's ADI, and sometimes I feel weird about, do I put a name in my watch list 2 weeks in a row? And then I always hear myself say, of course you do, because if you want to trade it and it's doing what it should do, then put it on there. Like, I'm going to be looking to trade this, and the idea worked really good from last week. I'm looking for eventual break above this 188 level as the possible long trigger that could get this a major leg up. But I want to get in or get involved in the idea prior to that, and I feel like you can have day trades and possible swing entries on this idea. So the areas I'm looking for, I wrote down on ADI is 179. So it's basically, I know you see this low here from Friday. And what the thing is like this yellow circle that I've drawn here, right? If we come lower, as long as we don't come below 176, which is this low here, anywhere back down in these levels is still going to be a higher low. So just imagine on Monday we come down here. Well, then this circle will be here, and we can still push up, and we'll still have that higher low followed by a higher high if we get back over 188. But I really, really like this quarterly pivot, and you can see how many times it's held, right? So I'm kind of hoping we lose Friday's lows and we roll over just a bit further. I'm looking for 179 area to scoop some ADI. And it's the type of trade where if I get the position put on and it's behaving well, I'll lock in my day trade on it, but I'll probably leave some on, like a swing size position on it, and then I can scale into that if it starts to confirm by eventually breaking back over that 188 level. But this name has just been behaving so well, so I see no reason to not have it on the watch again this week, and I personally am going to be looking to trade it. So there's one that I didn't put over here in the list, and I forgot about it, but it's definitely on my list, guys, and that's Microsoft. And if you were in the room, if you're in True Trader, you'll remember we pointed this out, how it was a great short every time it came up to this quarterly pivot at 183.20. And it was even a great short on Friday, the first time it pressed into that level. Let's take a look at So look, on the 5-minute chart, you can see it rejected that level perfectly, gave the pullback. But what we talked about in the room was when we finally break above that level, what would interest me is if we then begin to hold that level as support. And what the hell? Look at that. That is productive price action, in my opinion. I love to see that. And so one of the things that I like about it is how long it acted as resistance. I mean, if you count this 1, 2, 3, 4, 5, 6, 7, 8, and we remember it tested it a 9th time on Friday, 9 different times, this thing pressed up into that level and got rejected. So that's a lot of times. So now I'm hoping that this is going to become some serious support, and I'm looking to buy a flush right down off that quarterly pivot come Monday morning. I'm hoping we get that pullback. 338.30 is what I've written down. Obviously, the quarterly pivot's at 338.21, but I would rather start in early in case it doesn't get there, because you can see some of these highs are actually in the 139s, right? So I don't want to miss this trade. So if it comes in, I may start a little early and then kind of look to add as levels confirm. But I feel like this one could also be setting up for a swing. So again, day trade with the possibility of leaving a piece on if it closes with profits locked in on the day trade portion, and you have some cushion, right? So if we get in at 338s and this thing closes about 340, you know, you have the ability to say, look, I'm sitting on a nice little cushion here. Let's see how much this wants to pay me, because I see no reason why 350 is out of the question. Honestly, it feels like a foregone conclusion written in, you know, I feel like we're going 350. Just need to see if the market kind of participates with us, because obviously Microsoft is a major weighting of the S&P, right? So we'll see if this can continue the momentum higher. I like Microsoft. 338.30 is my level. Moving on, the next idea is SBUX, guys. And let's go back to the daily chart here. Again, this one is more for later in the week, I believe. I don't know if it's going to be something that I'm looking at on Monday. But if you look at the weekly on this one, this looks ready. This looks like, you know, this is a big flag up here. We pulled back. I think this was deeper than a lot of people wanted. Probably shook a lot of people out. Push back up, you got your higher low, and we're flirting with a new high. And so that would put the target up there at 126. You can see the annual pivot. It's also the all-time highs. So as a swing idea, I like SBUX over 117.50-ish. And I feel like you're going to get all-time highs on it if we trigger. But I'm looking to get involved after we break above. I'm not trying to buy dips on this name in case this area just ends up acting as resistance and it rolls back over. So what I've written down is over 117.33. That's where I would like to look to join the trend. So basically we break above that level, and I'm looking for pullbacks to start making higher lows and something to risk against so I can put the trade on and see if it wants to pay out. The next idea is RBLX, and this name has been super strong. And what you're going to notice, guys, is you're going to see a lot of these setups on these charts, these pullbacks, push up, higher low, right? And we don't know it's a higher low until what happens. Somebody tell me, what has to happen for this to actually be a higher low here? I know somebody's going to get it in the chat. And I know there's a bit of a delay too, so I'll keep talking real quick about the idea, and I'll wait and see if somebody hits the answer right there. But I'm looking for either, let's see, what did I write down on it? 113.60, which is this quarterly pivot that already held. Now here's the thing. Correct, Josh. A lot of people are getting it in the chat, and that's correct. In order for this to be a higher low, we first need to get back above 127s and make a new high so that this is actually confirming. So anything prior to that is kind of anticipation, guys. Keep that in mind. But I love the name. I love the space. This is part of that metaverse stuff, right? And, you know, you guys can have your own opinions about that stuff, whatever you want. My personal belief is that is going to be the eventual future. Web 3.0, and I don't want to miss on these opportunities, because these are the kinds of names we're early in that. This is still early in that, and these names might look pricey right now, but you know, you could look at something like RBLX trading at $300 sometime in 2022 or 2023 and be like, dude, remember when we had that shit at close to 100? So I mean, get involved in the names, guys, that have potential for growth and have charts that are telling you that they may want to go higher. The volume's there, the chart's setting up. So, you know, the one thing I will say that I don't necessarily love about this 113.60 level is that this thing has a $10 range, right? A $10 ATR. So if it breaks Friday's lows, I would be out of this trade immediately. I would stop out very quickly on this, but I am looking to buy this against Friday's lows in anticipation that this is going to get that push up. And again, if we get back over that 127-ish area, this could be heading back to all-time highs and possibly higher. So if you have something on and it closes strong at the end of the day, you can lock your day trade piece in and you can have a swing position started with the cushion. I see no reason why I wouldn't want to be positioned in a name like RBLX. The next one is ASO. And again, one of the things I love about this chart was Friday was earnings, and they sold off, bounced right off the weekly 20, and that's a hell of a daily candle, right? Big old wick down, and the buyers showed up, and they showed up with they were buying it convincingly, right? Ton of volume on Friday, obviously because it was earnings. You can expect to see the volume taper off, but it's still going to be liquid enough to trade. And what I'm looking for on this name is 44.60 to 44.80. So obviously there's no pivot right there, but what I'm looking at is, let's see, this area here where you constantly had these levels where it was pushing up. 45 is your annual pivot, but if you draw a line straight across from here, 44.60, that's what I'm looking for. So ASO, I'm looking for a flush off the open to buy. We're getting close to the end of the strong stocks, looking for continuation. Remember, I told you there'd be a financial name or two in here. Morgan Stanley's the one I picked because it's the most liquid, right? Trades 10 million shares on Friday with close to a $3 range, so it has the ability to give us what we need to make money. What did I write down on this name? It was 96.70, which is a stacked pivot area, and you can see it's been a very important level a few times, right? So I want to flush down there. I'm hoping, on Friday it closed at the lows. So hopefully you guys have picked this up from Goose when he does his midweek watches. He says this all the time. Something closes on lows like that shows still that it had weakness all the way to the end of the day, and it may have some continued weakness. So I'm hoping for a little bit more of a puke out down to that 96.70 area, and I want to scoop this for a possible long. Again, keep an eye on XLF, the ETF for the financials, because if it's weak and it's a whole sector thing, you don't necessarily need to be playing these names unless they start to firm up first. So, but I do like to look at that 96.70 area, and I like just how it's shaping up here. I feel like we could just be, and remember what the XLF chart looked like, guys. Remember, I feel like this could be setting up for a move higher. So maybe a weak open on XLF as well. And if the buyers show up around Fridays and Thursdays lows and it starts to curl, that might get us there on MS. So that's kind of the thought process there. And the last one is an oil energy name, ConocoPhillips. And again, seeing these setups everywhere, guys. The pullback, the push up, the higher low, and the possibility of breaking over 76 and be getting ready for that next leg up. Wrote down 71.60s where I want to be buying this, which is Friday's low a day, and the buyers already showed up there. You can see it's been, again, I don't just pick these levels out of my butt, guys. These are levels that have proven themselves a few times, and so I feel like the buyers showed up on Friday. Maybe we get that week open, buy this off 71.60, and hopefully that just puts in the low and we trend the rest of the day higher. Again, just like with MS, watch XLF. With something like COP, watch XOP. Okay, so make sure you guys know the sector things are in so you can watch those sectors to see how they're behaving. That's it for the strong stocks looking for continuation. The next section is things that are oversold, and I'm looking for a reversion on them. The only name on the list this week is Hood, and it's not there yet. I'm thinking this 1750 monthly pivot, if we puke out down to those levels, I'd probably be willing to put some on and see if we start putting in some higher lows and can get a bounce back up. It's liquid enough, and it has decent enough range that you can make some money on this. So almost a $2 ATR, but trading 20 million shares a day. Sometimes these higher liquidity names really are less of a headache because you can just get in with the size you need. You don't have to take 2 or 3 points on a name when you can put that kind of size on. You can really take 50 to 70 cents on a name like this and make a handsome profit. So HOOD is the only name on this list for me this week. Now we're into the short section. First thing we look at is weak stocks that are looking for continuation. First idea on the list this week is SAVA, and what I'm looking for is this 42, what did I write down? Under 42 basically. Lose 42 and I'm looking to short pops with some sort of defined risk. So basically I'm looking for lower highs to be put in once we come under 42. This chart looks like it's just hanging on by a thread. You had the big squeeze, came in, the next push higher. It's the basketball bouncing analogy. Every bounce is just lower and lower, and eventually this level breaks. And when it does, I expect some follow through. And so if we can snap that 42 level, I want to get in on the very next pop that pushes back into some resistance, because I don't want it to be one of those things where I'm waiting. I want that first pop after we break. So that's SAVA. The next idea is PDD, Pinduo, Chinese stuff. And you guys know there's that overhead risk of China names. I'm looking at this thing to push back into the 20-day, guys. You guys are going to start to realize like a lot of my ideas are all the same, but that's because they work. I'm not trying to go and look for new setups when I have these setups that consistently pay out. Fubo was last week and it did exactly what we talked about. AMC was last week, it did exactly what we talked about. There were a lot of names from last week's Sunday prep that literally just went like pennies within where we were looking and then rolled right back over. So PDD's just another one of those pops back into the 20-day. I'm looking for a fade. You have the annual pivot a little higher. If the 20-day doesn't want to be where it stops, I don't have a problem stopping out and re-entering on a pushback up into that annual pivot at 77.70. Yep, and that's pretty much the idea on PDD. So FUTU is the next one, another Chinese one. And on this one, I'm just looking for the 20-day. 50 is a psychological level very often. Thing is Thursday it kind of already tested there and we're coming lower. I'm hoping that it gives us one more shot at that 50 level and some way to come in with some set risk, because I feel like this thing could be coming down to these lows here and maybe even lower. I feel like it wants to test 35. If it breaks, who knows how much lower it could go. But I really like the way this thing is just behaving every time we push up into the 20-day, guys. I mean, the 200-day and the 50-day combo up there was beautiful. I think we had it on our watch list that week as well. And ever since, it's just behaved. It just respects levels. And that's what I like to look for, is stocks that respect levels, that make much easier traders. The next idea is LYFT, LYFT. What did I write down on LYFT? 44. Yep, so just another pop back into the 20-day, the quarterly pivot, and the weekly 20. And you can see it was a previous level. It was support, 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 broke, resistance, resistance. So next pop back into 44, I want to be there for the fade on LYFT. And the last idea in this section is AI. And again, these guys had news on, I think it was Thursday evening after hours, and it was that they won that DoD contract, and it was just a big sell the news event, right? And it was gapping up. This chart's broke. It's super broke. So there's a lot of people trapped in it. I feel like any sort of pop back into, what did I write, 39? I think 39 is probably asking for too much. 39 is where I would love it, but if it wants to pop back into 36.50, I may give it a shot there, because I feel like 39 is kind of dreaming. We'll see. I have those two levels mapped out for me on AI, and I will try both of them. That's it for the weak stocks looking for continuation. The last section I have is overbought reversion setups. And the only thing I'm watching is Apple, and you can't have a more important stock in the market to keep an eye on because it's so heavily weighted. So if you guys understand how the weightings affect the S&P, the SPY and the ES, then you'll understand why this is so important, because this is getting extended. Like if you go look at Apple charts, which people should be familiar with Apple charts, but you'll see when we get these big extensions, we get these big pullbacks, because it takes a lot to move something like this. The volume's coming in, but at a certain point, people are like, I'm not buying it up here. Why would I buy it up here when it's gonna give a pullback and give better prices? So I don't know how high it's gonna go. I'm not here to pick a top, but that 185 level looks juicy. You have the quarterly pivot at 184.50 and then 190. So I don't know where the top's at, but I am stalking this like a hawk for the fade. It's coming one of these days. The higher the better. I would love a gap up. We gap up, maybe the market gaps up too Monday morning. I mean, we've seen that how many times? Maybe this thing opens above 182, 183 and gives us that few points push right off the open, right into the quarterly pivot, and I'll throw the trade on and see if it is going to give me the lower highs and starts to work. Because when this does start to roll over, I want to be there. Now, another thing to know about this is if we're stalking Apple for a big short, right? Remember what that is going to mean for the broader market too. If Apple starts getting hammered and coming in heavy, good chance that the market's pretty heavy too. So a lot of those long ideas may be hands off, and I may be focused on a lot of those other short names from the weak stocks looking for continuation. So understand that, guys, that when the number one stock that I'm stalking for a fade because it looks like it's overbought is Apple, make sure you understand that when Apple starts to roll over, what that would mean for the rest of the market. So I'm going to go ahead and look at the comments real quick and see if we have some questions that we can talk about. Let's see. Oikora, I'm probably butchering that name, and I apologize, guys, for if I mispronounced what you guys intended your name to come off as. Says, you don't trade small caps anymore, Ricky. Yes, I do. I just don't put them on the Sunday prep. The only way a small cap will make the Sunday prep for me is if on Monday morning it's an A+ setup, and I feel confident about putting the ticker on there, because there is inherent risk involved with small caps, and I don't want anybody watching my Sunday preps to get slaughtered because they heard me like haphazardly throw out just a random name. Like any small cap that might be up or closed up 20, 30, 40% on Friday does not justify making the Sunday prep for Monday morning trade. I need something A+ that I'm willing to throw the idea out there where I feel like the edge is there, and it's going to be less probable that people get hurt on the name. So that's my end goal, is to keep you guys safe and to always be putting ideas out there that get your wheels turning, get you thinking, and possibly give you guys the ability to go hunt your own setups that I'm showing you guys. But I don't like doing the small caps on the Sunday prep unless it's A++. And I know that I'm going to be there for sure Monday morning, and it'll have probably my full attention. KHH says, how we are making new highs when all my stocks were down. Like, what pushed market up Friday was Microsoft and Apple. Is this not a dual top? Question is regarding the daily chart on the ES. So, we talked about that in the intro, right? Is social media, all you're going to hear about is people talking about the fact that the market looks great, but there's only a few names that are holding it up, and the majority of stocks are underneath their 200-day. Remember what I said, that can change really quick. Yes, I know a lot of charts out there look like absolute garbage, but there are just as many charts as I see that look trashed that look really good. So like, I have different scans set up in FinViz, right, to look for different types of setups. And I'm telling you right now, I saw a ton of bullish charts today when I was preparing for this, and I saw a ton of nasty charts, right? So just don't get overly biased in either direction. I feel like the market could continue a lot higher. When everybody's super bearish, I feel like we're going higher. That's the problem. Everybody thinking that exactly the same thing that you're thinking puts us all in this like echo chamber. And you know what? A lot of times, and I actually quoted somebody last Sunday, right? It was somebody I follow on Twitter that said, when everybody thinks like we're going lower and this looks like crap, the most likely scenario is probably going parabolic. So that's that. Yogi, would you say 1500 is a level of interest to the upside on NQ? 1500 or on the NQ? I'm maybe you meant a different ticker or something, because we're well above. We're not even close to 15K. So I'm not sure what level you were referring to. Can I look at pins, BABA, PLTR, and space? Okay, so I will. I'll take a look at a few, and I looked at pins earlier. Looks like this pins almost made the list this week. As what? If anybody watching this knows what I look for, what would I be looking for on pins? I would be looking for a short on any pop into the 20-day, because it's just respecting the 20-day. Every time we push, now obviously we had this squeeze. This was the rumor, right, that PayPal was going to buy Pinterest. And what happened? It turned out it wasn't true, and a lot of people ran in and bought that. And now, ever since we came under it, it's just riding the 20-day down. So like for Pinterest, I'm looking, if it pops, if it were to slam straight up into the 20-day, that 4150 area, I'd be looking to short it. Now, if it flushes out some more, I may have some levels to buy it down around 30 or something, but I don't see a long in this unless and we talked about this last week too. I don't want to be buying these stocks that are just trending down until they reclaim some levels and start to either base and get ready to make a push, or they start making higher lows and higher highs. There's zero reason for me to be involved on the long side when something is just making lower highs and lower lows. I hope that makes sense. So that's pins. I think he said BABA. BABA's the same thing. BABA is no different than Pinterest. Pop into the 20-day is probably a layup short. PLTR. See, a lot of these names the charts are all the same. So I looked at every single one of these when I was preparing for today, and I honestly was like, I could have put any of these in. You could rotate any of these names into that short list, and they're the same thing. Pop into 20 on PLTR, I'd be looking to fade. If it gets through 20, I have no problem stopping out and re-entering up at the 20-day. Or possibly even scaling in, maybe start 1980s and add 2080, get like a 20.5, 20.4 average, and see if it starts to confirm, and then you can add more. That's more like more experience. That it takes more experience to do those kinds of scale ins, and I'm not a big fan of them, but I could see a case to be made for it on something like PLTR. And space, yeah. All these are names that are just trending down, right? Any pop back into the 20-day is sold off, and until that changes, any pop into the 20-day should be a short. Let's see, SBUX. Starbucks looks like head and shoulders pattern. Starbucks was in my watch. Yeah, I mean, I can see how you might think that, but I also just think that when you start looking at higher time frames and understanding, one, Starbucks ain't going nowhere. It's not like I'm not worried about them at all. And again, the idea on Starbucks, if you recall, isn't to be involved in it yet. It still needs to do some things first before I would even care. And one of those things is breaking this recent high here. So it's got to clear that 117.33 area before I look to buy dips. And why is that? Because until it does, this could easily just roll over, and play out exactly like what you're pointing out, is that it might be a head and shoulders pattern. But again, until it proves that it's not, there is no trade there. And so typically I don't put names like this on my list because they may not even trigger throughout the week, right? And if they do, it might not be Monday, it might not be Tuesday, it could be Wednesday, Thursday, I don't know. Like FUBO last week took till I think it was Thursday when FUBO finally hit the level I was interested in and then came in as a fade. So yeah, Starbucks could be a head and shoulders. It doesn't matter to me because I'm not involved in it, and nor will I be involved in it until we get above certain levels. So hopefully that makes sense on Starbucks. Tony says, hi Ricky, what are your thoughts of shipping stocks? Hold on, let me pull this higher. That went ballistic due to supply chain crisis like YEL, DAC, DSKE. The one I like that I've been trading is Zim. And a good friend of mine, Jay Mintzmeyer, actually pitched me on this at Traders for a Cause in October. And he was right. Like this was Zim in October. This is when he was pitching me on it, and this is what it's done since. So I felt like an idiot for not taking his trade on it. But one thing I will tell you is that the recent price action, I don't like that at all. So what happened was this technically was a breakout right here, right? We didn't get all-time highs on it, but it broke this level, okay? And what did it do? It literally stuffed so hard and hasn't bounced since. So you see all that volume? That is people that are trapped. And until they all capitulate and flush out, this might have some more downside. So I haven't been focusing on that sector by itself, but I have been watching this name individually. And so if this were to flush out into 48s, 49s, I may actually be interested in it again if it starts to make some higher lows. How do you scan those names on Sunday prep? What is the criteria? That's from Kix T. I'm going to have to make the assumption that what you're asking about is like the setups I was just describing, like pops into the 20-day or vice versa. Now, FinViz is not working on Chrome, but I think, let's see. I'm going to see if I can, let's see, bear with me guys, let's see if this works. I have not tried to do this yet. No, that didn't work. I was trying to make it a different window. Yeah, you guys can tell I'm still kind of learning. Which one was I on? I was on the ES? No. What is it? That's the Zim chart. What did I do? I apologize, guys. Stick with me for 1 second here. No. One second. I got to figure out why this is not on my chart now. Oh, there we go. Well, look, I found what I was looking for anyway. And this is Vivaldi. So I'm using this to use FinViz, guys. So if you want to know like how I'm scanning for these, I have presets, right? So if I'm looking for something that I want to short when it pops back into the underside of the 20-day, I have one right here called short pops back into the 20-day. And look, so one of the things, these are the criteria. It's very simple. I want the price to be below the 20-day. I want the price over 15 bucks. I want the average range to be more than $1.50 because I need range and we need volume. So it needs to trade at least 2 million shares a day. And I prefer stocks that are under the 200-day, right? Because those are weaker stocks. It's very, very simple. Don't make things more complicated than they need to be, guys. And that's where you get, now you just have, look, there's 127 charts and they're all guaranteed to be stocks that are pretty damn weak. They're under their 20-day and they're under the 200-day. That means the 20-day is under the 200-day as well. So like, take your pick. Almost any one of these is a good short on a pop back into the 20-day. Some look better than others. So that's how I find that setup. If I want oversold reversions, right? I have oversold reversion setups. And obviously I like to change the volume back over to 2 million. And right now there's nothing that's got an RSI of 20, but if we bump up to 30, you'll see we start having some charts. And these are stocks that are oversold. So learn how to use your tools, guys, because FinViz is a great screener, but you got to kind of figure out what it is that you're trying to find, like define what the setup looks like, and then figure out how you would use a scanner like FinViz to isolate those charts. It's pretty simple. Okay, so pins and BABA and PLTR and space all short. You said things can change quick. Where is the Santa rally? Like, how low can we go? They're all down so much. All good companies. Okay, so when I listen, remember what I said earlier, guys, about not searching for confirmation bias. So like I can tell just from your questions, KH, that like you're emotionally involved in these stocks. And when you're emotionally involved, like you're just going to be looking for me to tell you what you want to hear. Like, where's the Santa rally? These stocks are strong companies. Like, but so what you're saying is that price doesn't agree with you, right? That's what we can kind of take away from this, is that price isn't in agreement. So there's two things that can happen. Price can change to meet your agreements, or you can change your opinion and be more logical. So like I can't make PLTR go higher for you, and I can't look at it and tell you that I think it's going higher. Like honestly, when I look at the chart, a lot of stuff has to happen before I think that it's gonna go higher. The first thing it needs to do is it needs to stop rejecting these key levels, right? So in my opinion, I wouldn't see anything constructive about PLTR unless we were back above 22 and then starting to make higher lows. And even then, it still has the 50-day and the 200-day above it and the weekly 20. Like it's below everything. So like if you're long a name like this from way higher and you're asking me on a Sunday prep what I think about these names, I'm only going to be able to give you my objective opinion, and I think it looks broke. And it's tough because I can't give financial advice, guys. I can't tell you what to do with your stock. But I can tell you that the most important thing you will ever do in trading is manage your risk and protect your capital. So, you know, if your goal on PLTR was to make, I'm just going to throw numbers out there, guys. If your goal was to make $1,000 on a trade, right? And it breaks some levels and you don't stop out, and before you know it, you're down $3,000 on the trade. You're now down $3,000, and your initial goal was to make $1,000. So that maybe will work out for you this time. Maybe you get out with a paper cut. Maybe you get out profitable. I don't know what happens. But repeated time and time again eventually is going to blow up your account. So it can't be a thing that is like, and you have to be honest with yourself. You have to look at your trading and go, is this something that happens regularly with my trading? Or is this like I got caught in something and now I'm like, what do I do? Capital preservation is the most important thing you could ever do. The worst thing you can do is to be wrong and stay wrong. And you guys have heard me say that before. It's fine to be wrong. But if you stay wrong when the stock was telling you to get out, this is how you end up in something like PLTR and this isn't directed at UKH because I have no idea what your position is on it, what your cost basis or anything. But I'm looking at this from what I see a lot of longs probably saw was this pattern here, right? And it broke above and then it stuffed. So I bet a lot of people bought this breakout and then it dipped and then it came back up and then it broke down. And then they probably go, well, it'll hold the bottom of this trend line. And then it didn't. And then it started to push up, give them some false hope, and then boom, slams down. And now you probably have a bunch of people in there with a 25 to 26 cost basis, and it's trading down at 18s, 19s, right? So, and for all I know, they've been averaging down the whole way. Maybe they have a 22 average, but they have almost full BP invested in this. They're probably like praying they don't get a margin call. That's not responsible. That's not responsible trading. Okay. How do you see Tesla here, Ricky? Higher volume on Friday, but barely finished above Thursday's close, and the gap at 9:10 seems too close to not fill it, or am I looking at it wrong? I like Tesla, but what I keep doing in order to not get too on one side or the other is to zoom out. You'll hear me say that all the time, guys. I like when we zoom out, and even though, yes, this is very wide price action, in my opinion, sloppy, right? We got a lower high followed by a lower low. Yes, I feel like 900s may be in the books because you have that weekly 20 down there. It would be a retest of the breakout area. It would be a gap fill. There's a lot of stuff below. But the other side of that coin is that this could just be, even though it's kind of messy, this could just be like a bit of a flag forming. You see this? So it could just be a bit of a flag and we could be ready to break out back above. What I would look for, and the way you'll find out whether or not that's true, is to be watching what happens if we push back into the low 1100s. This 1100 to 1150, right? You have those three pivots up there and it's the top of that flag. If it stuffs up there and then rolls over again, it's obvious the sellers are still up there. But if we get through that and then start making higher lows, it could just be a flag that we're going to break up above and go. So that's kind of the way I see Tesla from both sides, right? I don't want to be overly bearish, overly bullish. I just kind of think it's right now, it's kind of in the middle of no man's land. We'll see what happens if it breaks last week's lows. Last week's lows are pretty much what needs to hold, right? If it can't hold last week's lows, then I really do think that gap fills are coming, okay? Hopefully that answers your question. Do you look at PE ratios or any other fundamentals on your oversold bought names? I look at PE ratios and earnings per share only for certain sectors and names, and has nothing to do with whether something's overbought or oversold. When I do it, it's because I see a company that's just gone to levels where I'm like, really? Or like Twilio was one, Roku was one. You have these companies that there's a story, it's tech, it's growth, but they have revenue, but they don't turn a profit. And when you start to see some of these PE ratios get really, really extended on a company that doesn't have profits, and then couple that with the fact that we are possibly going to go into some tapering, the government's not going to be buying as much assets as they were. The the vast majority of people are like, whoa, maybe we should pump the brakes on the stocks that don't have net income, and maybe be looking for stocks that maybe the PE ratios are a bit high still, but at least they have earnings, right? It's not just a money hole or a sinkhole for your money. Let's see. KH. Yeah, man, I get caught all the time. This will be the end of my account, man. 620,000 down. Dude, that's rough. I hate to hear stuff like that, and it's tough, but that, and fuck. Honest to God, hopefully everybody listening to this too takes this to heart when I say this. Like, that is the exact reason, the epitome of why I constantly preach capital preservation, because risk management will keep you in this game. It's like, I can withstand being wrong a whole lot of times if my position sizing keeps it so my losses are manageable. And here's the thing. When you take too much size on a trade and get overly positioned, mentally, it's a lot harder to stop out when you should, because you're not really ready to take that loss. When you have your position size down to a point where those losses don't really affect you, then it's so easy to stop out because it doesn't really mean anything. And that's a huge takeaway, guys. That's something I really want to talk about, is no one trade should make or break you at all. You can't look at a trade and go, this needs to work. No, it doesn't. No trade needs to work. Every single trade should just be another small cog in the bigger picture, right? Like, at the end of the year, you get done and you do your year in review and you look, no one trade should be super significant. Will there be home runs? Of course. But the vast majority of your trading should be base hits. And what you don't want to see is a bunch of base hits, but a few, hopefully no more than 3 or 4, but sometimes you get to the end of the year and there's like 10 to 15 major losses, and those are the things that kill traders, right? Like, I talked about this at Traders for a Cause. I've talked about this. I yell this from the top of a hill to anybody that will listen, but most traders, when they review their trades at the end of the year, if you were to remove 3 or 4 of their big losses, their whole trading would do a complete 180, and they would maybe go from negative to positive, or maybe from a average or so-so year to a phenomenal year. And that's the difference. It's like 3 or 4 trades. Are you kidding me? How simple is it to just get rid of those big losses? I'll tell you, it's so easy. Set some max losses with your broker. Set some rules in stone. Have some position sizing parameters that you stick to. It's called discipline, and that is how you stay in the game. But guess what? If you're oversized and it goes against you and you weren't mentally ready to take that loss, then you end up staying in the trade, maybe even adding more, and you can see how quickly things compound and can get out of control. And I'll tell you this right now, Cage. If you still have 40K left, and that's down from 620 or whatever it was saying in the comments, don't go into that mentality of like, what's 40K? I might as well piss this away too, because 40K is enough to start from and rebuild your account. But you have to start treating that 40,000 with respect. You have to be disciplined, and you can build back your account. You can save or salvage it, but it takes serious work, serious refinement. You need to look at your process. You need to look at your capital, your risk management, and you need to learn how to preserve capital and not go into the hole. Because, I mean, if you were able to lose that much of a $620,000 account, it won't take you much longer to lose the 40K either. You got to stop the bleeding. That's the first thing. So, like I said, I hate to hear that kind of stuff, but it happens. Ricky, when you take a trade, do you just buy stock or do you buy options? And if options, how do you select which options? I only trade options the same way I trade the equities, and that's on emotional flushes or emotional spikes in the levels. And, I by no means am a professional when it comes to options. I really just use them when it's like, let's say Tesla, Microsoft, Facebook, Nvidia, higher price stocks, but they're the beta names that trade liquid. I'll buy the strike price that is closest to where I need it to be, that has the most liquidity. I'll kind of basically look for the same kind of emotional move into a level that gives that relief bounce, and I trade the options that way. But again, I am not an options trader. I dabble in it, and there are guys in our community like Mike, who runs the options room, who know a lot more about that stuff than me. So don't look to me for advice on options, guys. I trade them, but just like I trade the equities. So I don't know if there's any more comments. I'm not seeing any of them. Hold on a second. Can I explain about the pivots? Of course. Pivots are just math equations, guys. You can do a Google search on pivot points and figure out, there's websites that tell you how they're calculated, what they are, but they're just math equations based off previous periods price history, right? So the open, high, low, and close of that previous candle. So like if you're looking at weekly pivots, you are looking at so the weekly pivots for this coming week are going to be based off this weekly candle, so last week's weekly candle. The monthly pivots are based off monthly candles, so December's monthly pivots are based off November's monthly candle. And the way I trade them is the way we teach them in True Trader, which is we look for emotional moves into those levels, and always we like to see some confluence, and we like to take the opposite side of that trade, because here's the edge in itself is the fact that the person on the other side of the trade is acting emotionally. So like that's a huge edge, guys. It's a psychological one. And when you see a emotional move, whether it's up or down, into some really key levels, and you know for a fact that the person on the other side of that trade has to be acting irrationally and emotionally, then by and large, I want to be on the opposite side of that trade. So that's how we use them. If you guys want to learn more about the pivots, please come to truetrader.net. There is I want to say it's a 5-day trial for like $30. And the monthly, dude, what we're charging over at True Trader is pennies compared to what you're getting. We have scanners that find these trades for us in the opening. I mean, the scanners run all day, but like I said, we are actually trading that opening hour, and typically I'm done in the first half hour. If I'm still there trading for the opening hour after the first 30 minutes, it's either a very, very busy market we're in, or I'm just kind of hanging out on the live stream, and if something pops up, I'll talk about it. But that opening 30 minutes is where a ton of opportunity lies, and that's what we focus on capitalizing over at True Trader. So check True Trader out, guys. I think you're really, really gonna like the strategy that we're trading over there, and definitely learn about these pivots, guys. Most of your trades are before 10:30. Yes, the majority of my trades are in the first 15 to 20 minutes, guys. And I do use VWAP, but not like most people. I use it sometimes as targets just because I know a lot of other traders use it, but if you know me and you've seen the Sunday preps, or if you're in True Trader, you guys know I really like the 20 SMA. That's kind of my thing. I like the 1 minute, the 5 minute, the 20 minute, the 30 minute, the hourly, but whatever chart I'm looking at where are we at in comparison to the 20 SMA. So hopefully that makes sense for that. Yeah, somebody said one basic rule I have: never add to a losing trade. That is such a good rule, and everyone hears it and everyone knows it, but most people break that rule all the time, right? So there's a reason why it's a rule. If you make that a rule, have the discipline to stick to it, okay, guys? KH is, can I help him build a strategy and teach proper risk management? Come over to True Trader. I've got multiple webinars on risk management, Excel sheets to help you figure out how to calculate those things. The strategy is laid out there for you. If you're down to your last 40K and you had 600K, you should be considering finding somebody that can be a mentor whether that costs 100, like, dude, True Trader's $100 a month, guys. It's cheap. And you're going to find not just me over there, but Adriano and Goose and Sunil and Options Mike. There's a community over there that will help you and will get you back on your feet and do everything we possibly can to salvage that remaining part of your account. But you got to invest in yourself, buddy. ROI could be multifold when you invest in TT membership. Yeah, let's see. I'm just seeing if there's any more questions. I'm not really. I work full time and can't trade the open. 2 to 7 day swings are preferred. However, which time frame, 30 minutes, 60 minute, 120 minute chart works best with daily, weekly trend confirmation? That's a great question. If you can just swing trade, I would say stay away from most intraday charts. Like, if you're gonna use an intraday chart, hourly, maybe 2 hour, but I would recommend learning how to look at a daily chart and a weekly chart as if they were a 1 minute and a 5 minute, right? Because stocks all move the same. So you guys need to keep that in mind, that if you can learn the mechanics of how stocks trend, they can be applied to any time frame. And that's actually how you know if what you're identifying about a stock is actually true. Because if you find something to be true on a 5 minute chart, for it to actually be meaningful and really helpful, it should be applicable to all time frames, because that's the beauty of charts and the way price action unfolds, is that it's literally the same thing happening on each time frame, but just they do these dances. You have to learn how the different time frames work together. So you can swing trade and you don't even need intraday charts. You could literally use a weekly and a daily. All right, I think that pretty much sums everything up, guys. Listen, I hope you guys learned some stuff. I know, KH, man, it breaks my heart to know you guys are going through these things, but I'm telling you right now, you're not by yourself. There's a lot of people that go through these same things. That's the market, and it's cruel. And the crazy thing about the stock market, guys, is it's not personal. It doesn't care about who you are. It doesn't care about how much money you have. It doesn't see color. It doesn't see, are you girl, male, whatever. Like, dude, it's the ultimate leveling ground, and it sucks to know that people get hurt, but that's just the real truth of the market, guys. And it speaks to the amount of respect you need to have for it. If you don't treat the market with ultimate respect, you will pay the ultimate price. And that's, we talked about that actually on the Method and Mindset episode, like the analogy of the market being like the ocean, right? Like, you might think you have the biggest boat, and that boat can't be capsized and sank. And the second you think that, the ocean will teach you that you're wrong. And the market is the same way. You could have millions and millions and millions of dollars, and it doesn't take much for the market to show you that doesn't mean anything. All right, guys. Everybody stay safe. I'll see you guys tomorrow morning. Let's all crush it, but let's all protect our capital first, and then we'll crush it after.